Welcome, Fearless, to another Tactical Tuesday. Tonight, we are continuing our joint venture January, and tonight kind of continues in this whole process that we've been talking about for a couple of weeks. So welcome, everybody, and say hi as you come on, and let me know you're here in the comments and where you're from. That would be fantastic. So what have we talked about so far this month? First week, we talked about kind of laid the foundation on joint venturing. So we kind of laid the foundation of what is a joint venture? How do the numbers flow? How do the numbers work? Week number 2, we kind of talked about the paperwork that's needed in joint venturing. So we went through the letter of intent and the joint venture agreement. Week number 3, where do all these joint venture partners come from? That's what we started to talk about. And of course, tonight, once you have somebody that has a little bit of interest, what do you do next? What are the right things to say? That's our topic tonight. Say the right things, guys. And we're going to show you a recording that we took a little while back of what not to do. And that's what we're going to share tonight. So, guys, let's get started. And here we go into another Tactical Tuesday.
Hey guys, it's Corey and Tiffany, and we're the co-founders of Investor Life.
And we help investors scale their portfolios using other people's money. Fearless, welcome to another Tactical Tuesday.
Welcome to another Tactical Tuesday. We have a really cool topic that we're going to be talking about tonight. This, guys, I hope is a scenario that shows you the power of leveraging your money.
We help investors take their portfolios from 2 or 3, 5 properties maybe, up to 15, 20, 50 properties if that's what they're wanting to.
Really, the sky's the limit. And we help investors scale their portfolio.
For our free weekly live trainings that we do over there on Facebook. Thanks for...
Hey guys, it's Corey from Investor Life, and Tiffany just stuck out her tongue at me. Okay.
Yeah, that was a bad rendition. But guys, today, what wreck people in real estate? We're going to be talking about that, and we're going to make sure that it doesn't happen to you.
Welcome back, everybody. And here we go to continue on our joint venture January. And as we go through our presentation tonight, guys, and this show, if you have questions, if something doesn't make sense, if you know, you're not quite understanding it, throw it in the chat and I'll do my best to answer your questions, okay? And guys, this is all a lead up to our boot camp, which we're holding on February 23, 24, and 26. At the end of February, this coming month, we have our early bird on right now. It's 50% off. So if you're looking to really increase your game and up your game, all of what we're doing this month kind of leads into that event. So join us there. It's only $97. And hey, if you can learn a way to raise millions of dollars in real estate funds, is it worth it for $100? Absolutely. So come and spend a couple of days with us and you'll take a lot away from that boot camp, I promise you. So let's get started in our topic tonight, guys. And we've talked a lot this month about joint venturing, about raising capital. And that is something that all of us need to do at some point, no matter who we are. At some point, you kind of run out of capital if you want to continue to buy real estate, right? Has that happened to any of you? Throw it in the chat, guys. If you kind of reach that point where you need to use other people's money, you need to raise capital, you need to maybe start joint venturing. We talked about this in the weeks past, that this is something that Tiffany and I had to do. We were kind of in the position where we had to raise capital because we didn't have it on our own when we first got started. And so if you've ever been in that position, you're not alone. Let me put it that way. And so we've kind of laid the foundation throughout the few weeks that leading up to tonight, which is what is a joint venture? What paperwork do you use? What things do you need to know to talk about with a potential partner? We talked about the letter of intent a couple of weeks ago. And then, of course, last week, how to find potential partners, how to start conversations, or even just change the conversations that we're already having. to start dropping some hooks or planting some seeds with people that could be potential partners. And that's kind of leading us into tonight, guys, which is, what do we do next? Okay, we've got some interest. Somebody's maybe asked us a few questions. Maybe their money is not doing them anything. It's sitting in a bank account. Maybe it's in a mutual fund. They're really not getting anything for it. Maybe last year they lost some money. They maybe put it into some Bitcoin or something like that. And so now they're looking for another more stable place to invest. And you, as a real estate expert, have an option for them. And so they're starting to ask a few questions. And, you know, maybe this is kind of the point where you say, hey, let's get together for a coffee. Let's sit down. Let's chat about, you know, what we bring to the table, what you're looking for. Let's get to know one another better, see if we can work together maybe. And this is kind of the first meeting. And we've had several of these over the years where we met with partners. And we kind of started to learn what worked and what didn't. And so tonight, guys, we're going to kind of show you what not to do, because I think that there's a lot of things that we go into these meetings expecting to happen, and maybe it doesn't work that way. Or maybe there's things, because we're nervous, we're meeting with somebody that potentially could invest with us, and we start to get nervous and our nerves get up and we don't really know what to say, or maybe we say the wrong things, or we get too excited, or we overwhelm them with details. And if we've been to a few of these meetings and not got the results that we want, there might be a reason for that. And of course, we've been in hundreds of these meetings, guys. And when you go through that process, you start to learn what works and what doesn't. And out of the hundreds of meetings that we ended up going to, we ended up closing on 13 different joint venture partners. So one thing that I'm going to tell you right off the bat is not every meeting is going to work out successful, but we probably wasted a whole ton of meetings prior to finding out what was successful and what can make you successful. And so if we can make you successful right off the bat, that is definitely going to help. Okay, so that's our purpose for tonight, guys. And so welcome everybody. I see we have people from BC, Port Alberni, Panorama, all the way to Nova Scotia, and in between Saskatoon, Canmore, Spruce Grove, Yarmouth, Nova Scotia. I hope I said that right, George. Ottawa, Oshawa, Westport, Edmonton, Halifax, all over the country. So welcome everybody to our Tactical Tuesday tonight. As we go through this, guys, throw your questions in the chat. And what I want you to do, we're going to be sharing a video here of what not to do at one of these meetings. Do you have a pen? Do you have some paper? Do you have a way to take notes, guys? As we go through this video, it's about 7 minutes long. We're going to play it. Now, this was a presentation that Tiffany and I did back probably close to 8 to 10 years ago now. We did it on stage, and this was a presentation of what not to do when meeting with a potential partner. And I will say this, we're slightly over-exaggerating what not to do to get the point across. And I want you to pick out what things Tiffany does in this video that are incorrect, that wouldn't work, that are ineffective, okay? And we're going to talk about this when the video is done. So make a list of them. And when we watch what somebody does that's incorrect, then it's easy to pick out what we really need to do, okay? And of course, all of our Ignited members know that this is just one of many videos within our membership site. Of course, we have what to do, we have this key takeaways, we have many, one conversation close, getting the commitment, all the different videos about how to really do this properly. That's the point of joining Ignited, guys. But tonight we're going to share what not to do, and I want you guys to pick out these points, okay? We can't share everything in one session here, unfortunately, but we're going to share this tonight, and this is going to help you to see really what works and what doesn't, okay? That's the point. So here we go. I got it. Thank you, George. Good to know. Good to know. Okay, so we're going to get into this video, guys, and make notes. Take note of the things that are incorrect. What should she not be doing? And I'll just lay the groundwork. Tiffany is the one raising capital. In this particular instance, she's the one that is the working partner, and she's coming to meet me. And in this example, I am the potential money partner. So I've expressed some interest in maybe investing with her. And so this is the kind of the first meeting. We've had a couple of conversations, but this is the first in-person meeting to kind of bring it to that next level. Okay, so here we go. We're going to show this, and I want you to see what is wrong with this scenario. Here we go, guys.
So let's just preface this with that there's big difference between the two. So one is what to do, and one is what not to do. And like Barry said, it comes from a place of having listened to a lot of different joint venture presentations from our clients that we're coaching so that they can buy more property. And it's just a lot of standard stuff that we see. And then the second one, I'll show you how maybe you can make it a little bit better.
And two, maybe we should say that this is the actual presentation. So earlier we were talking about doing the pitch, so the 60-second pitch to get the meeting. Well, now you've made it to the meeting, and I'm the potential joint venture partner.
Hi. Are you Corey?
I am. Yeah.
Hi,
yeah.
Corey. I'm Tiffany. I'm so
Great.
sorry I'm late.
That's okay.
Yeah. Traffic. Is it okay if I just grab a coffee?
Sure. Yeah.
Okay. I will be right back. Okay. I can calm down now if I have a coffee. So thank you for that. That's really good. Traffic was crazy. I'm sorry. Anyways, traffic was crazy.
Yeah, it is bad.
So,
yeah.
Okay. Let me just kind of, I guess, take a minute to get ready, if that's okay. Is that all right with you?
Sure. Okay.
Okay. So, well, first of all, I would like to congratulate you today on your taking your financial future into your own hands and that of your families. And
Okay.
I know that I'm able to be a vehicle for you that you will not want to, go by. So I'm really very proud of your efforts today and your time.
Okay.
Yeah. So first of all, we should talk about why to invest in real estate. So the top 3 reasons to invest in real estate I have right here. One of them is leverage, and it's like when you have a little bit of money and you're able to get a whole bunch out of it, it's a very good thing. Economic fundamentals is the number 2 thing. So being able to, understand everything in what's driving the market is good, right? Edmonton's very good for that. Mortgage pay down and cash flow, because you get so much
Right.
out of real estate, and you get both, right? So it's a no-brainer, of course. We know
Right.
that. So now that we know why real estate, we also should talk about why Edmonton.
Okay.
I mean, the numbers show it, right? We know the numbers. The numbers say it's number 1 in North America. So,
Oh.
what?
Okay.
Yeah, why not? It's not too expensive yet in Alberta. So we're getting in like under the radar. We're going in before it all hits. And then of course, oil. And do I have to say more? Oil, money.
Right.
So I wanted to show you too. I brought with me a whole bunch of information. And this information, it's got all kinds of stuff. I got to show you these headlines. These headlines, Alberta's perfect storm. It says here, it's as good as it gets with Canada's lowest unemployment rate, fastest economic growth, highest input and disposable income per capita, fastest growing retail sales and automotive sales, a budget surplus. This Marie Christine, she's an economist for, anyways, she says that it's as good as it gets in Alberta. And so that's why I'm investing here.
Okay.
And this one talks about RSPs.
Oh, yeah.
And how it's better than RSPs. So for example, this said in 2002, the number was 5.99, and in 2012 it was 27.1.
Oh.
So it's very good. So, and I have a whole bunch of extra articles that maybe I can go through with you after. And you can see I keep track of all the economics of everything, government net assets of Alberta, and it's very, very good compared to most provinces. And affordability, we're very good in it. We're under what most are.
Okay.
So it's very good. And so I have a whole bunch of things that I could show you in here, and I'll just show you the one that's for you.
Okay.
So this property here, the numbers are unbelievable. There's a whole bunch of information which we can go through at another time, but the return on investment, it's like unbelievable. So for example, in your RSP, you might get 3 or 4%, but in this, probably, if we look at it with these numbers, we're going to probably get 80% in 1 year.
Oh.
Pretty amazing.
Okay.
Yeah, don't you think?
Well, yeah, that's a great number.
Yeah, it is. Okay, so how much money do you have to invest?
Well, I'm not really sure whether this is right for me yet. I'm not really sure yet.
How about mortgages? How many mortgages could you qualify for?
I haven't really, I don't know. I'm not sure.
Okay, no problem. Your financial future is a very big decision to make. And so I understand that you might need a little bit of time to decide this. But the diversified and growing market in Edmonton is one that you most probably want to take advantage of. So why don't I give you a call within 4 or 5 days, and we'll make another appointment to discuss any concerns or any questions that you may have.
Well, I'm actually going away for a couple of weeks, and how about if I call you?
Well, that sounds great. I will await your call. It's a little over the top, obviously, but we've heard a lot of presentations, and believe it or not, pretty much everything that we just showed you has been in one or more of the presentations, and it's nerves. It's just nerves. They over prepare, and you're really, really happy with what you have, and then it starts coming out and you're completely nervous and start rambling, which I do in real life anyway. But so that was the don't do, just in case you weren't clear on that.
All right, guys. So I think you got the point from that video, from that presentation that we did several years ago now. You can probably tell by the fact that there's no gray hair on my head back then, and we looked much younger. But that was a what not to do. And so, guys, let's run through this. I hope you kind of took notes of some of the things that don't work in that scenario. So I want you to throw it in the chat. Okay, let's start at the very beginning. If you remember what was happening at the very beginning of that presentation, what things went wrong? Okay, I want you to get this, because as much as that was a little overdone, these are things that we see happen all the time. And these are all these little things added up, end up being things that, people go and do these presentations or meet with many different people and don't come away with a partner. And we want you to be different than that. We want you to learn from these things. And of course, we have other videos of what to do and many trainings that go on and on about this. But let's chat about this now. Okay, so I'm going to look at the comments. So don't be late. Absolutely. That's exactly what she did at the very beginning there. She was late. Be ready before you arrive. Tiff was actually giving you 5 days to get your money. Yeah, she was late, not prepared. Skip the coffee. Don't deserve it if you're late. She didn't buy him a coffee. Don't be too technical. Don't read material to a potential investor. Know your stuff. Condescending. I like that, Lisa. Saying she was proud of him. I remember one client we had that was presenting to us as a working partner did the exact same thing. And that's kind of where we got it from, was, I'm proud of you guys for investing in your future. And, you know, if you're the working partner, especially if you're first getting started and you don't have very many properties yet, and you're talking to somebody who obviously has the money to invest, do we want to come across that way? Do we want to be condescending? No, we don't. Do we want to, you know, make ourselves sound more important? Or what we call all the time is using buzzwords, you know, like it's great of you to be investing in your financial future, or things like that. These are the buzzwords that get used. And what happens is it comes across like a pitch instead of coming across like a simple conversation. And that's really what we want you guys to be doing. Don't be boring. Read cues. Exactly. Was she looking at my cues? Was she looking at the fact that in that example, I'm staring up into space, I'm not really interested? Was she reading that? No, she wasn't. Stats don't mean anything. Absolutely. That is so true. Now, there could be some value in looking at specific numbers if you know the backing of them, if you know where they come from, if you can back up why that's important, then, you know, sharing some statistics could be of value. But just throwing numbers out there that you don't know where they're from or what they mean, or you can't explain them, then obviously there's no value in that. Mel says, didn't take any time to get to know you. Okay, guys, this is a very, very valuable piece of information here. Do you remember at the very beginning of that presentation, Tiffany what did she do? She kind of says, can you give me a second to get ready? And she kind of puts her stuff down and, okay, let me start my presentation. Now, how different is that from, you know, it's kind of like, let me now start my pitch versus, how's it going? How's the family? What you been up to lately? Getting to know the person, asking them questions, getting them to do some of the talking. How much more valuable that is versus pitching somebody or starting a presentation, or maybe opening something on an iPad or opening a binder to share pages. You know, there's two different ways of doing this here, and that is not a good one. ROI DPM. I'm not sure what DPM, down payment money, ROI down payment money, not being accurate with that. That's absolutely, Diane. Yeah, that's incorrect for sure. ROI don't mean anything sounds more like, okay, so somebody here, this is Diane again. I think it's Diane that says this. Yeah, 80% unrealistic numbers, guys. If we start throwing up unrealistic returns, unrealistic ROIs, what's going to happen to the people that we're talking to? People that actually have the money to invest with us, are they going to take us seriously if we're unrealistic? Remember, you always want to under-promise and then over-deliver. What happens if you do that? If you under-promise, if you promise somebody, you know, 3-4% returns on their money, and then they end up getting 8-9%, what's going to happen? They're going to invest more, or they're going to refer their family and friends, right? If we start saying to somebody, oh, well, you're going to get 10-12%, and they only end up getting 4 or 5%, what's going to happen with that person? Are they going to refer other people? Or are you going to continue growing your business? Are you going to bring in referrals? No, obviously not. So remember to under-promise and over-deliver. Lisa and Kelly, same kind of idea. Build a relationship first. Didn't ask him about his goals, about my goals. Why am I interested in investing in real estate? Absolutely. She didn't listen to me at all. It was more of a pitch and a presentation versus finding out what it is why am I there? What's the purpose of me being there? These are all things that are super, super important when we're talking to somebody. Michael, push an investment before knowing what the potential investor wanted. How true. We got caught in this, guys, is that, you know, I remember when we were pushing cash flow. In fact, way back when, our company, we named it, and we had business cards. Our company name was Cash Flow Opportunities. And then we sat down with an investor, actually became our our largest joint venture partner. And in our second conversation with him, he said very plainly to us that I'm not interested in cash flow. And we sat there through, I don't know how many hours preparing, how many conversations we had had to that point, and just talking about how great the cash flow was. And here we go and meet with this guy, and he tells us, I'm not looking for cash flow. What I'm looking for is equity appreciation and mortgage paydown. So are we trying to sell something to somebody and we don't even know? Maybe we know, we haven't had the conversation yet to figure out that that's not what they want. So this conversation should be completely different in Tiffany first figuring out what I want as a potential partner and then catering to that. What else we got here? Needs to be interested in the person finding their needs. Absolutely. Diane, good one there. She seemed to say the reason she's investing is because of one recommendation in the media, says Lisa. Yeah, she's following headlines. Wasn't she just reading headlines there and saying, well, if this person says so, then hey, that's great. Obviously, there's not much backup there. Overpromise, says Lisa. She asked him questions about his personal finances before getting to know him better. So do you remember she, near the end there, starts saying, well, how much money do you have to invest? Or how many mortgages do you think you can qualify for? Do you think that that's a proper way to find out what somebody's potential is as a money partner? Obviously not. Coming straight out and asking that question, you're probably not going to get too far. Now, are there ways to find that information out? Absolutely. We have that in our what to do video, which is part of our Ignited membership. But guys, tonight we wanted to just go through this one video because we only have a certain amount of time and we want to dissect the important points from this and make sure that you understand everything that these are the common mistakes that people make when they sit down and meet with somebody, and we don't want you making these mistakes. Diane, having them calling you back, they may never call again after this presentation. Would you? If you were the one meeting with Tiff, do you think that she would be somebody that you would want to invest with after this meeting, after this coffee presentation? No. So let's go right back to the very beginning. And I'm going to highlight 7 main points that hopefully you can take away from this video that we showed tonight and this presentation of what not to do, and 7 main points that you can then incorporate in what to do when it comes to meeting with somebody. Okay, so number 1, let's go back to the very beginning. Be early. Now, what does early mean? If you're meeting somebody at 12 noon, what time do you think you should be there? Should you show up at 11:57? If you're meeting somebody at 12 noon and you're the working partner, now remember, if somebody's going to invest tens of thousands or hundreds of thousands of dollars with you, what do they expect from you? Well, if I'm the one investing, I expect my working partner to be somebody that's there on time, that's there prepared, that's there before me, that is thinking about things ahead of time. Because if they're late for this meeting, what does that mean for them taking care of my investment going forward? Does that make sense? Right? So what time should we be there? We should be there 15 minutes, 20 minutes, maybe even half an hour ahead of time. Guys, this is important. If you can actually raise hundreds of thousands of dollars from somebody, do you think it's worth an extra half hour of your time to be there early, to be settled, to not be flustered, to have the time in case maybe there is a snowstorm, maybe there is an accident on the way, maybe you do hit that train, maybe all of these things could happen, but because you planned ahead of time, then a lot of those eventualities are taken care of. So plan to be there well in advance. Now, is it possible you can come late to some of these things? Absolutely. Things can happen that are out of our control. However, for the vast majority of these meetings, guys, be there early, okay? Second thing, that's point number 1, be there early. Second thing, point number 2, it's a conversation. It's not a sales pitch. Now, there's a difference. Remember in the presentation that Tiff did, she sat down, she opened her binder. Okay, now's the time to get started. Okay, let me start pitching you now. So different than saying, how's your day going? How's your week going? How's your month going? Whatever question we want to ask. How's your real estate investing going? Have you been looking at properties lately? What kind of stuff interests you these days? Are you going anywhere this winter? Have you been out skiing? Are you going somewhere warm? Start a conversation about normal life things. Have a conversation, not a sales pitch. That's point number 2. Point number 3, guys, is be organized. So this comes with being there on time, but organization has more to do with that than, remember when Tiff came down and, okay, well, let me get my binder out. I got to find this. Let me go get a coffee. What kind of impression does that give on somebody that's going to invest lots of money with somebody? How do you think they feel that their money is going to be taken care of? Now, today, we might not meet in a coffee shop. We might be meeting right over Zoom or digitally. Is our meeting started early? Are we there on time, or do we wait to the last second to show up? Do we open that meeting 15 minutes early as the host if we're the one hosting it? These are things that we want to think about, that even in the digital world, we want to make sure that we're the one that's there ahead of time. We're the one that's calm. We're the one that's organized. If we have a presentation that we want to share, it's open already on our computer. We already know how to share it, on the screen. Whatever it is we might be doing, we want to make sure that we have that ability and we figured out that process. And if we don't know how to do that now, guys, it's not that difficult. We can ask somebody for help. Okay, so being organized is point number 3. Point number 4, guys, know your numbers. If you're going to be quoting stats, if you're going to be quoting vacancy rates, if you're going to be quoting rental rates or property prices or market appreciation rates or interest rates projections, if we're going to be projecting certain things, we need to know why we're projecting those things. It can't just be a gut feeling, right? Or I grew up in this neighborhood, so I think it's going to do this. Where are those numbers coming from? How can I back that up? Is anyone else done research on this? We need to know our numbers. And here's the thing, guys, is that if we start quoting what an ROI is, can we figure out how to get there? If somebody asks us what's the cap rate, do we know how to figure that out? If someone says what's the cash on cash return, do we know what that is? Now, if your answer to these things is, I'm not quite sure, I don't know exactly, do we fumble through it and try to pretend that we know it? Or do we say, hey, listen, I've done this calculation a million times and I don't remember exactly how to do it, but what I'm going to do is I'm going to go back and I'm going to figure this out for you and I'm going to get you an accurate number. How much more valuable would that be than trying to fake something that we don't really know that well, right? Be honest. That's right, Lisa. Be genuine, Craig. Exactly. So know your numbers, guys. And if you're going to be quoting numbers, if you're going to be using real estate lingo, make sure that what you're saying is accurate. Okay, that's just simple education that helps you to do that. That's point number 4. Point number 5, there's 7 main points we wanted to make here. Point number 5 is be curious and then listen. So what do we mean by that? So if you are talking to somebody that could potentially be investing with you, you're creating a relationship with somebody that you might have for 3, 5, 7, 10 years or longer. Is this somebody that you want to spend time with business-wise? Is this somebody that you are going to mesh well with communication-wise? What are they trying to get out of this? Could you ask some questions? Could you be curious? What is their why? Why are they wanting to invest in real estate? What piqued their interest? Did they read a book? Did they go to a seminar? Did they join a membership group? What is it? Why did they look towards real estate? What drew them towards you and your potential opportunities? Be curious and ask some questions. Because if we do that, then that leads into our next point. And our next point, which is point number 6, find the problem. Find out their issue. Why aren't they doing it on their own already? And then fix it. So maybe somebody knows that they want to invest in real estate, but they don't have the time. Maybe somebody wants to invest in real estate, but they don't have the contacts that you have. They don't know the realtors. They don't know the mortgage brokers. They haven't educated themselves. They don't have a mentorship or a coaching group that they're a part of. They don't have all of those things. They haven't spent the money maybe to be mentored. They haven't spent the time to be educated. But it doesn't take a rocket scientist nowadays to know that real estate is a good place to put your money. So are these people, do they have a problem that you can fix? Maybe it's time. Maybe you're the money partner in this situation, and the person that you're talking to is going to solve that problem for you. Or maybe you're the working partner and you can solve that problem for them. The point is, guys, is everybody that ends up partnering with someone else, it's because they're solving a problem that the other person has. So find out what that is. And that ties in with the previous point, point number 5, which was be curious and then listen. So that comes down to just asking questions, getting to know people, proper communication. Remember, it's a conversation, not a sales pitch. So these are the important things, guys. That's right, Craig. The person listening is in control of the conversation. 2 ears, 1 mouth. Very important point. Point number 7, guys, and this is kind of wraps it all up. And there's so many more points that we can delve into tonight, but we wanted to just cover these main 7 points. Is at the end of every conversation that you have or presentation that you have with somebody in this scenario, what you want to do is you want to walk away from there with some sort of summarization of your conversation. Okay, so here's the conversation we had. I'm going to send you an email, kind of summarize everything we talked about, where we're at, kind of, what agreements we might have come up with, what answers to the questions that you've told me. We're going to summarize everything. I'm going to send you an email just so that it's all on paper. We're on the same page. Maybe you start coming to some sort of agreement. We should start looking for something. Maybe you've used, usually not in this presentation or in this initial conversation, but maybe you have gone through some of the points of a letter of intent. So maybe you know the market that you want to be buying in, or maybe a price range or something along those lines. I'm going to summarize that. I'm going to send it an email to you. What does that do? Well, that makes sure everybody's on the same page. If something is misunderstood, let me know so that we're on the same page. Because if we're not now, we can get there, but we just need to make sure that we're on the same page. And sometimes putting it down in writing, somebody can read it 2-3 times over. That can help to make sure that we're on the same page. And here's a little trick, guys, that you can do when it comes to that summary email. Make sure that you end that email with a question. So here's everything that we talked about. Oh, by the way, have you finalized those plans for that winter vacation? Here's everything that we talked about. Oh, by the way, how did your kids' hockey practice go? I'm giving you some examples here. Here's a summary of our conversation. Oh, by the way, is it still snowing out there? Because it's dumping over here. What does that do? When you have a question at the end of an email like that, what does it do? Throw it in the chat, guys. Having a question at the end of your summary even though it might not have anything to do with real estate. It might not have anything to do with real estate investment. What does it do? That's right, Sean and Andrea. It keeps the conversation going. It keeps the conversation open, right? Craig creates a personal relationship and gets them to respond. That's right. How many times, you kind of summarize everything, you send it off to somebody, and maybe you never hear from them. You're wondering, did they get my email? Did they open it? Did they disagree with something? Are we on the same page, or maybe we're not now? And now we're in a little bit of a I'm not sure stage. Well, if we have a question at the end of that, we become, again, more personal. We're getting to know somebody maybe a little bit better, but it also keeps that conversation going. So there's another tip for you. Okay, guys, so here we go. We've talked a lot about what not to do tonight, and 7 main points. We're going to run through them quickly again. Be early. It's a conversation, not a sales pitch. Be organized. Know your numbers. Be curious, and then listen. Find their problem, then fix it, and summarize with an email and end with a question. So those are the things we want you to be doing in these initial conversations, these coffee shop meetings, and nowadays maybe a Zoom meeting, something like that. These are the types of things that we want you to be doing. And what's going to happen if you follow these steps, guys, it's all really simple. If you're following a system, and for all our Ignited members, you know that in your membership site, we have a 30-minute outline for this. We call it a presentation, but it's more of a conversation. We have a 30-minute outline, and it outlines exactly what to be doing in each minute of that conversation. You can have that sitting in front of you, especially if you're at a Zoom meeting, and make sure you follow the outline. This is a system, guys. It's step 1, 2, 3, 4, 5, 6, 7, 8. If you follow the steps, this is where the money comes to buy as much real estate as you want to buy when you start having conversations the right way. Okay, so that's the main point we wanted to get across tonight, guys. We've gone through the whole process so far to this point of Joint Venture January that I hope you guys are a lot farther ahead than you were at the beginning of the month when it comes to securing joint venture partners, when it comes to raising capital and doing this the right way. So, guys, this all leads into our boot camp. Our boot camp, and I know Jules shared the link at the beginning of our training tonight, but she will share it again here with you again. If you haven't joined our boot camp yet, do it now. Do it tonight. It happens on February 23, 24. That's a Friday and a Saturday. We conclude on a Monday evening with FAQs, etc., answering every single one of your questions. We're going to be going through a whole ton of this process. So if you've been to one of our boot camps before, we've kind of gone through steps 1, 2, 3, and 4. This boot camp is a little different. We're going to quickly summarize 1 to 4, but we're going to move on to steps 5, 6, 7, and 8. Okay, so this is a next level up boot camp, guys, that we want every single one of you to be a part of if you can. If you're looking to raise capital, if you're looking to join venture, if you're looking to buy more real estate and scale your business, then this is the boot camp to be at. Simple as that. Okay, so it's $97 to join. That's 50% off right now, and that's good till the end of the month. But if you know you're going to come, join up tonight, commit yourself, and your life will change following that boot camp if you follow these steps. I promise you. Okay, so there we go. Craig and Lisa, thank you very much for saying that. The boot camp changed our lives. 2 years ago, we decided to invest in our future. We will be there. And you guys are very much along the way, Craig and Lisa. So great to see all the changes you guys have been making. You're welcome, George, for another great night. Sean and Andrea, do the boot. That's right. Do the boot camp, guys. You guys have been to several of them. Amber will be there. Game changer. Thanks, Amber. Changed my life completely, says Lisa. So that's awesome, Lisa. Thanks for saying that. That's it for tonight, guys. We're going to end it there. And for all of our Ignited members, as you know, we meet on our laser session on Zoom. So we will see you at the top of the hour in about 15 minutes or so on our normal spot. And we will continue this theme of Joint Venture January into our laser session with our Ignited members. There we go. Great night, guys. Thanks for joining us. I hope you grabbed something from this. And if you missed weeks 1, 2, 3 to this whole joint venture January, they're all here within our group. If you're following us here in our Fearless Real Estate Investing group. So go back and watch them. If you missed something, you can watch them over and over again. Guys, that's what it's here for, is to make sure that you are successful as a real estate investor. Have a great night. We'll see our Ignited members over in our laser session, and we'll see everyone else next week for another Tactical Tuesday. Take care.